Right, welcome to part 3 of lecture 18-B. We have just finished calculating the ratios for the common share investor perspective. The most recent one we did here was the book value per share, but we need to make sure that we understand what this means. Remember, book value is the value that is recorded on the accounting records, and it follows GAAP, which means that it is something that's done consistently across all companies that follow GAAP, but they can be quite distorted from market value. So, for example, the historical cost principle, will mean that the book value of an asset is recorded at what you paid for it. If you bought it 50 years ago, if the company bought it 50 years ago, it may have, that original price may have no relation to what it's worth today. So we have to understand the limitations of book value per share. That's not necessarily the, what each share is worth. Normally when shares are traded on an exchange, the market provides that valuation for you. So book value per share really only has meaning when you have shares of a company that aren't traded publicly, which obviously most of them aren't. The vast majority of companies are not listed. So in that case, it can at least provide a starting point for trying to figure out the value of a company's shares. But just don't be blind to the limitations of the book value per share. So based on all of these, what can we say? What do we know about this stuff? What does it tell us? Well, earnings per share are up, which is good. The price to earnings has fallen, and the dividend yield has fallen. So one question I would have for management is, will dividends be increased? Obviously we want some more information. The other thing is, why did net income go up, right? What drove that very spectacular increase in earnings per share? Is it sustainable, right? So was it a one-shot deal, or is the increase in net income sustainable? Will next year's net income go up by approximately the same percentage, right? We don't know. But these are the kinds of questions we want to ask management. Of course, they're going to give us, the rosy picture, and so we have to have our, our little BS meter functioning, and or BS detector rather, and by asking more and more pointed questions, try to gauge the truth of, pick the nuggets of truth out of the whole thing that you're being told. Anyway, that concludes the lecture.